but liquidity is what moves the marketplace, and that's the one thing that you've got to learn, okay? For most trading strategies, you're taught market structure first, liquidity and everything else second. It's the wrong way to do it. Hello everybody, so I'm going to do an end of week markup on EURUSD, just because it was a really complicated, kind of confusing week, and I struggled with it at times, to be fair. We managed to get some direction from the kind of the higher time frame bias, but it was difficult. I'll be honest, it was difficult, and it's really difficult kind of understanding the weekly cycle, where price was likely to be headed and those sorts of things. And it was kind of Thursday onwards that we got into some really clear and obvious trades. So I'm going to talk you through that today. I'm going to start by just clearing my charts off in classic fashion. If you're not doing so already, make sure you're subscribed to the channel. Make sure you stick through to the end, because I'm going to teach you why trend does not matter as much as you think, and why liquidity is the #1 thing that you need to look at to get into profitable trades. Just so you can see what I'm looking for, what I'm going to be trading, and let's get stuck into it. So if we start the week, let's put horizontal lines. Where's Monday? 28th, Wednesday, Thursday, Friday, Monday, Friday, Wednesday, Tuesday. Is that right? Monday the 18th. Yeah, I think it is. So Sunday from there. Okay, cool. So this is kind of, yeah, this is kind of what we're looking for. Now, the reason why this week was quite confusing is because if we're always assuming that Monday is going to be our accumulation day, and therefore Tuesday, Wednesday is going to be our manipulation days, and therefore Wednesday, Thursday onwards is going to be our distribution days, the indication is that this market was going to drop bearish, as you can see. But clearly that didn't happen. And this is where, if you weren't quick on your feet, you could have got, stopped out. Now, the good thing about this is you had your Monday accumulation. That's kind of classic Monday price action. That's exactly the reason why I don't trade Mondays, okay? And then we had this big kind of bullish push here. Now, when ultimately you know that price is quite bullish, it's quite easy then to get into these trades because you've seen this push up, push down, push up. There's no kind of bearish break. So what you could have easily done is got into the trade somewhere like this. You've probably got like a 5-minute MSU there. Yeah. So look at this price action. So this is the Asian range. Okay. Now I'm gonna sneeze. Yeah, there's a lot at the moment. Excuse me. Oh, I'm not even ill. It just keeps happening to me. It's really annoying. So yeah, so this is our Asian range, as you can see here. Okay, coming out of Monday into Tuesday. We've had our push up, push up. Now, look, what I'd be expecting ultimately is with a clearance of this liquidity point here. Okay, what I'd be expecting is for price to sweep that, give us a nice ISC, and then break down and kind of give us a short setup. Ultimately, that hasn't happened. That's fine. What it does do is it keeps pushing higher. So for me now, I'm looking, right, okay, where can we get into this? So I'm looking for something like a 5-minute MSU. So you've got push up, push down, push up. We're looking now for a manipulation, okay? Manipulation there, that's our first manipulation. Now, if you'd taken that entry, you'd have probably been stopped out, okay? My strategy says that you basically take the engulfing, which would have been there, and then use the last low, which would have been there. So you would have been unlucky, you would have been stopped out, okay? What we could have done, however, is after that had happened, is seen that actually we've got another entry here, okay? We've got another slightly larger MSU pull it, if we look at kind of basic premium discount range, okay? That first trade was in premium, okay? So it's not the most valid of trades as it is. This, however, this is now in our discount zone, so we're happy to take that all day long, wait for the engulfing, stop below the low. We then got a nice safe trade. We get 2R out up to the highs, and then we're looking to the left and seeing where else we've got liquidity areas. So we've got a lovely liquidity point here, okay, which would take us then into the rest of the day, and then see if we get any New York open traps. So where's my price gone? So let's just get rid of this box, okay? So in terms of where New York is, I think it's switch off at the moment, 2 seconds. So in terms of where New York is, if we drop down, okay, so we've got a news trap here. So news must have come in at about 12:30. We had a big push up, big push down. We take that first supply, as you can see there, which is here on that candle there. That's our trap. Okay, and then we're looking for a reversal, ideally of a liquidity area. Now, to be fair, I wouldn't have taken this trade. You can see that the trap was invalidated, which is exactly the purpose of the trap. But for me, there was no entry here. I'm not taking any liquidity to the left. It's bouncing off this imbalance here. You know, let's just get rid of that. It's bouncing off this imbalance here. There's nothing in this for me which says I want to get involved in that. So I would have missed that trade. But if you were hungry, you could have taken it like this. Held up to that last high, got yourself 2R, possibly a little bit more. For me, though, that's not a trade I would have gotten into. So that's kind of Tuesday price action. Now, we then go on to kind of our Wednesday price action. This is where it does get really complicated, okay? Now, the expectation is that because we've had an accumulation manipulation, we're going to get a distribution. So I'm more than happy to consider shorts from here. And what I would have expected is price to continue down further. So I'm going to be looking then at the start of the day. We've got our Asian range there. That's our accumulation. We then get, that's our accumulation. We then get a nice push down, push up, push down. And do you know what? Raw price action. This is actually a buy setup. And what I did do here is I took a buy. Okay, because it hasn't given me a short setup. For a short setup to be valid, I need a liquidation point to be taken. Once I've got a liquidation point, a liquidity point to be taken. Once I've got a liquidity point to be taken, I then sell. But I didn't get it, so I took a long here. I got stopped, and then that was kind of it. Okay, I got my MSU set up there, as you can see. Okay, and then that was kind of it. I was out of the trade. Okay, I got stopped out. No profits taken. See you later. And what happened is coming through to the rest of the day, we had this huge kind of push down. And then New York opens, and we get our trap that's printed. And then when price is confusing like this, wait for key liquidity areas to be taken. So that's a key liquidity area because it's external liquidity. This is a key liquidity area because it's new liquidity that's just been put into the marketplace. So we can mark that one on as well. Okay, that's fresh liquidity. And what happened is price moved up like this. Move down, move up, okay, move down. And if we just jump to the 1 minute time frame, what you'll see here is a lovely little MSU. So sometimes the MSUs are easier than others to spot, okay? Now our MSU is right here. Now the expectation is this. We're in a bearish marketplace right now, okay? So all we're looking for is bearish setups. It's not giving us any indication it's going bullish. Okay, if we were going to take a buy out of here, we definitely would be taking it up here. What I'm more confident on is the fact that I've got a MSU setup above a trap. And for me, I'm going to be taking that trap all day long. Okay, so I enter on the engulfing, stop above. We haven't got a previous high, so I'm going to use kind of a wide stop, maybe use some of that liquidity over there. So that's a nice stop here. And then we're going to hold down to the trap and take my first profits there. Sorry, hold down to the first liquidity to the left. That's a nice 3.5 out. Might have even got 2 there. So yeah, 3.5 out, and then down to the trap, you're 5.9. Okay, then we're absolutely laughing. Okay, more than happy with that. Trading's done for the day. Move on to the next day. When we get into the rest of the week, this is where it starts getting really exciting. So for me now, what I'm looking at is this. On Monday, I've had my accumulation. I've then had a push up, but the price action is so bullish. I'm thinking, do you know what? We've got external liquidity here. We've got external liquidity here, and we've got external liquidity here. I'm not gonna miss out on that liquidity when prices come up, you know, and started making some kind of bullish signals. Technically, that's a break of structure. So for me, I'm looking at this and thinking, right, do you know, how can I get into this marketplace? So I'm going to be looking for bullish signals ultimately. So I'm looking at this Asian range. Okay, let's mark that one on. Okay, now I'm looking for a clear manipulation of one of the sides. So that technically wicked just above. That's not a clear manipulation for me. I'm looking for a clear manipulation. Okay, we get a nice push down here. That takes out loads of kind of external liquidity and the Asian range. So let's mark that one on like that. Okay, and then what do we have there? We've got actually a 3-minute MSU setup. So up, down, up, down, up, down, up. Manipulation there. Okay, we get an engulfing candle, which we can enter like that. Stop below the low to the left like that, and then we can hold up to the high, which is the last one there. 1.79 out of there, and then we're holding on for these external liquidity sessions. Now, the reason why this is really confusing is because the weekly cycle was a little bit odd this week, and I'll show you what I mean. So let's get rid of that. It's confusing. Get rid of that. Get rid of that. I'm actually going to get rid of all of this up until here. So Monday ideally is your weekly cycle, then you'd ideally have manipulation, then distribution. But sometimes what happens is it starts a little bit later. Now this week what we had is Tuesday gave us an accumulation. We then had some push down like that. Then we had a manipulation of that high there. So that's a manipulation there. So this really is all part of the accumulation. Then we had some manipulation there to the left. Okay, so the manipulation of the, of the low, apologies. Manipulation of the low. That's our manipulation. And then what do we get for the rest of the week? We get bullish price action. So this is our accumulation. This is our manipulation down to the low to the left. Okay. And then this is our distribution. Now, sometimes the price action is really confusing, and this is where we have to use different biases. Okay, if you want to look at the Friday price action, by the way, then just go and have a look at the video that I dropped yesterday. Okay, sometimes we have to use a higher time frame bias. So for us, look at this marketplace. You know, we are very, very heavily bullish. Even if you track back to just here, we're very heavily bullish. We've had one big push down like that, but then it's rejected the EPA and it's pushed higher again. So, you know, on a daily time frame, we are bullish. We haven't changed structure. We've had, yes, a push down like this, but in order for us to change structure, we've got to sweep out a structural point, a clear structural point, which we have not and did not do. So ultimately, we're just looking at this thinking, right, this is bullish. So sometimes that weekly cycle is going to be a bit confusing. You're not going to know which way to turn or how to trade it. Sometimes that's just the way it is, and you've got to be a little bit subjective. You've got to be a little bit on your toes. Sometimes Monday's going to print some weird candles. This is where you've got to be just in the market and used to it and experienced. For me, I took a loss and a win there, I think. My trading week really started on Thursday. That's where I got into some big trades, because I was thinking, do you know what? I haven't had the manipulation of the high that I was looking for. I haven't had that commitment to go bearish. In fact, what I've had is I've had a little bit of bearish price action, but then I keep rejecting it. When I see then Thursday sweep the lows and then give us a bullish setup, I can assume that we're going bullish, even though there is a chance that price is going to come down here, because we've manipulated to the left, and then distribution should be bearish for that week. The higher time frame trend is bullish, and this is where trend can be your friend. I don't trade trend that much, but there's times like this where actually I need a bias. I'm not sure which way market's going. I've got a bullish setup. Can I take it? Well, yeah, take it, because ultimately price is bullish on the higher time frames, so it's safe to take that sort of assumption. You know, we took kind of 8-9R out of this one, and I think we took a little bit more on Monday. Again, Friday, exactly the same. Accumulation, manipulation, distribution. Don't need to go into it. You can see it from there, okay? And that's another however much out. So, you know, a higher time frame trend can sometimes help, but liquidity is what moves the marketplace, and that's the one thing that you've got to learn, okay? For most trading strategies, you're taught market structure first, liquidity and everything else second. It's the wrong way to do it. Liquidity first. Liquidity fuels the moves. Get your liquidity moves done and then go from there. If you're not doing so already, please subscribe to the channel. If you've learned something in today's session, please make sure that you subscribe. Really appreciate the support, and I'll catch you in the next drop. Cheers.